Okay, let's unpack this. Welcome to a deep dive where we're pulling insights from the sources you shared about the current state of the crypto markets. Today, the focus is squarely on recent analyses covering Bitcoin and Ethereum.
That's right. We've been sifting through perspectives from analysts at Santiment and Derive, touching on some fascinating angles like market sentiment, how historical performance lines up or doesn't with current trends,
Hmm.
the big picture of macroeconomic factors, and even those, subtle seasonal shifts that can impact trading.
Yeah, and our mission is really to cut through the noise here. We want to extract the most important nuggets of knowledge. Like, what are these experts really saying about Bitcoin's immediate path? Why is Ethereum suddenly back in the spotlight? And what external forces do we need to be mindful of that are shaping these price movements right now? Think of it as a shortcut to getting truly well informed on what's happening.
Exactly. Let's jump into the material you provided.
Okay, first up, let's look at Bitcoin, and specifically what's happening with sentiment. Brian Quinlivan, an analyst over at Santiment, highlights a key point right off the bat. He's seeing a significant buzz, a real anticipation building across social media for Bitcoin's next all-time high. People seem pretty excited.
Right, and this is where it gets really interesting from a market analysis standpoint. Santiment's view, and it's a common one in technical analysis, is that markets often have this counterintuitive tendency.
Huh.
They tend to move in the opposite direction of peak retail euphoria.
So all that excitement might actually be a bad sign in the short term.
It could be. So when social media is just humming with anticipation for a surge, it might actually be a signal that the market isn't quite ready to make that move. Not yet, anyway. It often needs to shake some of that excessive optimism out first.
But it feels like we're right on the edge, though. I mean, at the time the source was published, Bitcoin was trading at $109,679. The May 22nd all-time high was $111,970. We're talking about being just 2.1% off that peak. That's incredibly close.
It is close, absolutely. And Quinlivan specifically notes these frustrating close calls near the eighth. Think about it from a trader's perspective. Seeing it get that close but not breaking through, it tests your patience.
Okay, so if the market needs to, shake out optimism, what do these frustrating near misses actually do to that sentiment? Does it work?
Well, that's a great question. These close calls, precisely because they are frustrating, can start to chip away at the sentiment for smaller traders. They get impatient, maybe a bit discouraged, and this process of sort of neutralizing that earlier, perhaps overly optimistic mood could paradoxically be exactly what's necessary before a potential breakthrough can happen soon after.
Okay.
It's like the market is consolidating sentiment alongside the price.
Makes sense. And looking at the broader mood, the Crypto Fear and Greed Index was reading 72 when the source was written. That puts it squarely in the greed zone.
Right, which aligns perfectly with the Santiment idea that sentiment might need to cool off slightly before a sustained push higher is really possible.
It's a fascinating dynamic, isn't it? This tension between high anticipation and the market maybe needing a reality check. But despite these potential near-term headwinds and sentiment questions, it's crucial context to remember that Bitcoin is still up a remarkable 61.32% over the past 12 months.
That long-term performance is definitely key and shows the underlying strength, even if the short-term path gets a bit bumpy. Now let's pivot slightly and bring in another perspective from your sources. Dr. Sean Dawson, head of research at Derive, offers a more cautious view, particularly for the near term.
Okay, what's his take and why the caution? What's he seeing?
Well, Dr. Dawson specifically points to historical trends. He expects Bitcoin will likely underperform in the third quarter Q3 of this year.
Q3. Why Q3 specifically? Is there something about that period historically?
There is actually, historically speaking. If you look at data from CoinGlass going all the way back to 2013, it shows that Q3 has consistently been Bitcoin's weakest quarter. On average, it's delivered only about a 6.03% return.
Wow, only 6%. That is a stark contrast. I mean, you compare that to Q4.
Exactly. Q4 has historically been its strongest, averaging an incredible 85.42% return.
Huge difference.
Right. So that historical pattern provides a pretty significant basis for Dr. Dawson's caution for Q3. He also connects this outlook to broader macroeconomic factors. He highlights that uncertainty in the wider economy is a major concern for traders right now.
What kind of macro uncertainty is he focusing on? Anything specific?
A big one is interest rates, particularly from the Federal Reserve. The expectation, as of June 18th, when the source was published, was, well, overwhelming. The CME's FedWatch tool showed a 99.9% expectation for rates to remain steady at that 4.25% to 4.50% range.
Right. And how do those steady, relatively high interest rates impact an asset like Bitcoin?
While they can dampen its appeal, especially for investors looking for those outsized returns. See, in a low-rate environment, riskier assets like Bitcoin can seem more attractive because yields elsewhere are just so low. But when interest rates are higher and stable, there are more appealing lower-risk options available and maybe less pressure for investors to move into volatile assets like Bitcoin just to chase yield.
So the key takeaway here is that, according to Dr. Dawson, you've got this historical Q3 weakness combined with the current macro picture, particularly stable, high-ish interest rates, creating a more cautious outlook for Bitcoin in the near term. It's a very different angle than just looking at sentiment needing to cool off.
Precisely. It adds important layers to the near-term analysis. You can't just look at one thing.
Okay, so while Bitcoin is navigating these potential sentiment headwinds and historical patterns, the sources also highlight a different story playing out with another major crypto. Brian Quinlivan, back at Santiment, also pointed out a high level of optimism toward Ethereum.
Yeah, and what's fascinating here is this apparent shift in attention. More traders and analysts seem to be turning their focus to Ethereum. Quinlivan notes it's been playing catch-up, as he put it, since the overall market started recovering around mid-April.
And you can really see that catch-up in the price movement, can't you? Ether hit a low of $4,472 on April 9th, but had recovered significantly, trading at $2,793 by the time this source was published. That's quite a bounce.
It's a substantial move in a relatively short period, definitely. But it's worth noting the contrast with Bitcoin's performance over the last year. Despite that strong recent recovery, Ether is still down 21.50% over the past 12 months, whereas, like we just said, Bitcoin is up over 60%.
Right, good point. So why the sudden optimism now if it's still down over the year? What changed for Ethereum?
Well, according to Quinlivan, one key reason for Ethereum's recent strength and this shift in optimism is actually related to Bitcoin's earlier jump. He suggests Bitcoin's significant gains over the past couple of months allowed for what he calls profit redistributions.
Profit redistributions. So money flowing out of Bitcoin into Ether.
Essentially, yeah. As Bitcoin holders took some profits, some of that capital likely flowed into other cryptocurrencies, including Ether, allowing them to see gains and, well, catch up a bit.
And he provides context that just a couple of months prior, Ether was actually seeing maximum bearishness. That's quite a rapid turnaround in market psychology for Ethereum.
It really underscores how quickly sentiment and capital flows can shift in these markets. Things change fast.
Okay, so we've looked at Bitcoin sentiment and the historical macro factors and this emerging optimism around Ethereum. Now, let's consider another layer that Dr. Sean Dawson brings up, something that could affect the entire market. The potential for overall crypto trading volume to decline in the near term.
And the reason for this is pretty straightforward, actually. It's the arrival of summer in the Northern Hemisphere.
The classic summer lull, sell in May and go away kind of thing.
Sort of, yeah, exactly. It sounds simple, but it's a real pattern. Many investors take vacations, trading desks might be less staffed, and overall market activity can just naturally decrease during these months.
Okay, and what does that potential seasonal lull in volume mean for prices? What's the risk?
Dr. Dawson suggests it raises the chances of sideways price movement, just kind of drifting, or potentially even sharp pullbacks. The thing is, with lower trading volume, the market can become less liquid and more susceptible to volatile moves. Smaller buy or sell orders can have a larger impact than usual, and traders who've made gains earlier in the year might see this quieter period as an opportune time to take some profits off the table.
Which could trigger those sudden dips.
Exactly. It adds another element of caution for the near term across the board.
So to quickly recap the insights from the sources you shared, on one hand, we have analyses suggesting Bitcoin's immediate path might be challenged by high retail optimism that needs to cool off, coupled with that historical Q3 weakness and persistent macroeconomic uncertainty, like interest rates.
Right. And on the other hand, Ethereum seems to be showing signs of recovery and attracting growing optimism, possibly fueled by some of that profit-taking from Bitcoin.
And overlaying all of this are these external forces from broad macroeconomic conditions like those interest rates to more predictable patterns, like the potential seasonal summer slowdown in trading volume.
It all interacts, doesn't it?
It really does, and it raises an important question, I think. Considering these differing expert views you brought to the table, Santiment's focus on sentiment needing that reversal. Dr. Dawson's emphasis on historical patterns and macro concerns, the spotlight on Ethereum's recovery story, and then the potential for that summer slowdown. What stands out to you about how many different, sometimes conflicting forces can influence the market at any given moment? It makes you think about how you weigh sentiment versus historical data versus these big external economic and even seasonal factors when you look at the market. Definitely something to really mull over as you process all this information.